Very good morning to one and all. This is Varnam, Assistant Professor of MBA Department of SNS College of Technology. In today's session, we are going to discuss on the subject financial statement analysis, and we are going to see the introduction part of an accounting. So, let us get into the topic. So, today we are going to can you connect this picture? Yes. So, accounting with manager. So, today we are going to discuss on what is accounting is all about, how the accounting practices is being followed inside the company. So, introduction to an accounting. So, accounting is considered to be as a language of the business. It communicates the end result about the company to their stakeholders. That is, it communicates the business results of the company, whether the company has been earned a profit or the company has been suffering with a loss. So, what is the end result of the company is being communicated to their stakeholders. It also states as what company owes and what company owns. That means what is the the asset value of the company and what is the liability value of the company. So, account is concerned, it tells or it communicates the current position of the company. So, that is what called as an accounting. So, that is why we are telling it is a language of the business. It helps us to know the profitability of the company. What is the net profit of a company, whether the profit has been increased or what is the profitable status, whether it has been declined, and what is the financial position of the company, that is what is the value of their assets and the liabilities. So, that is what all about accounting, and we will get into the definition of an accounting. So, when we tell about the definition, we can segregate this definition into 5 aspects. So, one is recording, the second one is called as classifying of transaction, third one is a summarizing of transaction, then analyzing and interpretation. So, the first and foremost thing in accounting is recording, and second one is classifying, third one is summarizing, and fourth one it is analyzing, and after analyzing it's been interpretation. So, that is what the definition of an accounting. Accounting is an art of recording, classifying, summarizing in a significant manner and in terms of money. So, in accounts we speak only about the monetary transactions. Non-monetary transactions will not be recorded in the accounting. So, only the monetary transactions will be accounted, will be considered. Non-monetary transactions will not be considered in the accounting. So, as we have been discussing, first step it is called as a recording, right. So, how we will record the transaction? With the help of a journal entry we will record the transaction. So, first and foremost thing is recording. So, you will identify the business transaction in the prior stage. After identifying the business transactions, you will go for recording of this transaction by way of preparing the journal entry. So, once the recording has been done, you will classify the transactions. Classifying in the sense grouping the transaction under one head is what called as a classifying. See, in case of a journal entry, you will not group the accounts. What we will do is we will record the transaction on a chronological order. On the date of the occurrence, like we will write the journal, but ledger in the sense like we will categorize these accounts under individual heads. That means purchase will comes and all the purchase transaction it will comes under the purchase head. Sales is concerned, all the sales transaction it will comes under the sales head. So, that is what called as a classifying. So, classifying in the sense grouping of transactions under the similar head is what called as a classifying. See, if we are not classifying the transaction, we cannot come with a clear picture, that is how much we have spent for the purchase, or how much we have spent for the rent, or how much we have spent for the advertisement, or how much we have been spent for the telephone expenses. So, in order to get a meaningful knowledge about our transactions, we will go for classifying it, and then comes the summarizing. So, how we will summarize the transaction, that is by way of preparing the trial balance, by way of preparing the trading account, profit and loss account and balance sheet, like we will summarize the transactions. Then comes analyzing and interpretation. So, after preparing all these statements, then we should analyze the statement in order to know what is our current situation or what is our current position. So, that is what the fourth step, that is called as analyzing of the financial statement. So, without analyzing you cannot know where you are or know how far like you have been higher than your competitor or how far you have been less than your competitor, right. So, analyzing plays a vital role in the company. In order to make a decision, a proper decision, analyzing is very, very important. So, if you wanted to know take your company as you have planned, without analyzing you cannot take any proactive measures inside your company. So, analyzing is where you will come to understand what is the current position of your company. That means what is the current cash flow ability of the company, what is the liquidity position of the company, or what is the solvency position of your company. That is what all about the analysis, whether the assets has been increased or whether the liabilities has been decreased or whether the liability has been increased, what is the current scenario, that is what called as an analysis. So, after analysis we will go for interpreting in the sense after doing the analysis you have to conclude your analysis, that is what called as an interpretation. So, what you wanted to tell or what sort of alert you wanted to give to your company, that is what called as an interpretation. So, based on the result which you have found, you will give an interpretation. So, without analysis you cannot give an interpretation, as well as once you have done your analysis, if you have not given with any interpretation, that is also not useful. So, both analysis and interpretation plays a very important role in the company. So, accounting is concerned, like we have 5 steps, that is recording we will do through journal. After that, classifying, that will be done through ledger. Then summarizing will be done through trial balance, trading account, profit and loss account and balance sheet. All this transaction will be recorded only in a monetary value, non-monetary basis will not be considered, and finally you will be analyzing and interpreting. So, that is what all about accounting. So, now it is time for an assessment. Okay. So, can you tell what is the first and foremost step in the accounting? Yes. Recording or classifying or analyzing? Yes, it is recording. So, first and foremost we have to record the transaction, then we will go for classifying, analyzing and summarizing. So, today we have seen the definition of an accounting. So, we have discussed what is accounting and we have also seen about the a short definition for an accounting. Thank you for watching the video. Thank you.